Tesla is starting to get more and more credit as an AI company, but I don't think that's even priced in yet.
I think Elon's China visit was really crucial. So I do believe the institutionals now entering in will know that by July, August. But I'm very confident that the number is going to be higher now.
Entire move really started at the Ford announcement, so that was around the 180 mark. So that is just, it's a sentiment shift. I think that's the big deal with what's happening in the stock.
All right, everybody, welcome to CyberBulls. So we've seen the stock almost double, in fact, more than double since January 3rd. It started at $108 per share. Now it's over $240, and this momentum does not seem to be slowing. So many good news for Tesla, and with now both the Ford and GMs striking a partnership with the superchargers. So we've got the gang all here. We're going to ask everybody, why do you think the stock has been rising? What's going to happen in the future? We're going to cover macro, we're going to cover ESG, and we're going to just keep talking about what's happening in the future for Tesla. The company and the product. Don't look at the quarterly stock movement.
As a trader, I got to take some off the table and wait for a better price.
A very realistic bull, questioning certain decisions.
The rational bull. We enjoy listening to bears.
Looking for the red flags. You're supposed to react.
So welcome, Alexandra, Christian, Jeff, and of course, Xander. We're finally all of us here for a long time, so thank you guys very much. Let's start with you, Christian. Tell me what's going on with the macro, and why do you think what's happening with Tesla?
Yeah, well, let's talk about Tesla real quick. We just had news after he just partnered with Farley and Ford. Now we have Mary Barra and GM coming to the table, right? We just heard the Twitter space, and it was kind of awkward. I don't think she wanted to do it, really. I don't know if Elon made her do it to get the deal done. I don't know, just speculating. But again, I think the stock is rising for two reasons, in my opinion. I think one reason for me, it's just the value, right? We talked about this before. Model 3 being now getting the 7,500 credit, which it was 3,750, but now being 7,500. The value you're getting on a Model 3, even though Model Y is the driver, near that $30,000 price point for a new car, like that technology is insane. And I think over time, people will appreciate that more. And I think the Model 3 at this price point will become compelling. And I just, when I think of that, I just see so much value there. So for me, it's actually getting me to buy more stock because I see now people are going to want that car. And even in a bad macro, Model 3 becomes a value play, right? Like a Camry. And then the other thing is the supercharger. We've been talking about this, and people say, I always talk about the supercharger network. For me, it wasn't like what it could bring. It was the value of owning it, right? The infrastructure of it. And now we're finally seeing that value come to play with a GM, with a Ford, coming to Elon. It almost looks like, and the market is reacting to that stuff that we knew. But when was it going to happen? When was the market going to realize that Tesla has the infrastructure, right, and get rewarded for it, even though it wasn't a big money generator? And now I think we're seeing it with Ford and Farley, with Barra and GM coming to the table, allowing their customers to use this. It's a signal in investors' heads saying, oh, Tesla really does have this whole thing wrapped up. I've seen a couple bears, I'm not going to mention names, actually change their mind on Tesla. Firm bears that thought that these other competitors would catch up, and now is reassessing that after they watched, the Farley interview. And now this Mary Barra statement is only going to reaffirm what Farley just did, and more people are going to wake up and say, oh my God, Tesla has this whole thing kind of to themselves for 2 more years, right? However long this is going to go, because I know in the, I'll wrap up here. I know in the, what is the Inflation Reduction Act, they're going to build out supercharger network, but that could take another couple of years. The government's very inefficient. We know the ones that already exist, like, Electrify America, whatever, are terrible. They're broke all the time. So to have a network where you can go around the country, like the Tesla supercharger network, that's going to be reliable, that is already in place, is so valuable, and we're finally seeing it. So I love it, and I think it's only going to increase as we keep going forward. Yep.
Yeah. I want to show this chart here, which is Tesla stock. I don't want to do what happened in 2022 because it fell dramatically. But here we go from the beginning of January to where it is now. We're skyrocketing up. What are you guys thinking? Alexandra, you were saying that you're pretty happy. What do you think is happening with the stock?
Yeah, I'm very happy. So it's isn't it crazy how when good news feeds good news, everything falls in place, and the other way around, right? We just lived through quite a difficult 12 months, and now we're really moving in the other way. I think the key moment, because you asked, when did this all start and what really shifted? I think the key moment was the shareholder meeting, right? Seeing Elon focused, having a new CEO at Twitter. Let's just hope it works out. And then just so many things that just fell in place. May some of them be coincidence, may some of them be planned, but it just happens in a very short window. I saw an article, which may be right or which may be wrong, that Tesla wants to open the next gigafactory in Spain. We had rumors a couple of days ago about India. We're still talking about South Korea. So you see actually worldwide politicians and journalists trying to really attract an investment by Tesla, be it a battery factory or be it a giga auto factory. We're really back on a train where things work. And I just want to get a couple of seconds on that supercharger network advantage. Of course, first of all, the build out is there and they're just continuing, and they were continuing rolling out before Ford and GM committed. But Ford and GM are not the next ones. I actually thought it would be Rivian before GM, but I'm sure Rivian is coming soon. It's going to be interesting to see what's going to happen with Lucid, because there's no love story between Lucid and Tesla, but I can't imagine Lucid hanging on their old systems and not jumping on the Tesla norm train. That also means there's actually no debate anymore what type of charger will become the North America charger, right? Tesla won that battle. Now, the next question is, will Tesla win that battle in Europe? Because Volkswagen has to jump on this now. They are having EVs sold in America. Hyundai will have to jump on the train. And then if these companies that also sell in Europe think about it, because it's just such an easier, more reliable system than anything else that's in place. So this could actually mean that Tesla has won the battle not only on supercharger norms and being the only one. So I know lots of people understand this already, but I want to state this again. This is as if in the whole of America and in the whole of Europe, all the gas stations were owned by the same company. And it's our company, right? And this is just enormous. And yes, the margin on electricity may be slightly less than on a gas station, and even, I did a study on gas stations a couple of years ago. I remember they don't have a huge margin there, especially not the operators. So thinking this through, what this would mean in both America and Europe, and then probably in other regions as it spreads out, is just enormous. It's unbelievable.
I've got so much to say about the superchargers, but I think we should stick with the stock. And we've got Xander here. I consider you one of the most people I have deep respect for following the stock and knowing where it's going. So I'm just curious what you've been thinking as you watch the Tesla story unfold.
You're too kind, Herbert. You're too kind. I'm an idiot. But I think that 230, 333 is a 700 pre-split level that we just walked right past, and there was no there was a hesitation throughout the day. I said this morning that like 237, I think 40 was was like a small resistance level. That I thought if we get past that, it's going to go supernova, because this is a big run. You're a day, we're talking 10 days, and then 11 days is the longest run that we've had. So we're at the tail end of this, historically speaking. And now you have, news compounding, as Alexandra said. That is just feeding the stock. Now, in terms of like excitement, to anyone who's been around for 3 or 4 years or 5 years, or the long termers, that this is just a discounted price still. So the market is going to figure it out. All the AI talk is going to hopefully get the company re-rated. I've seen a lot of coverage, and Jeff can speak to it. He follows it closely. But like channels are finally talking about that, Tesla AI instead of just car company. So 260 for the stock. I think, let me check my line real quick, but it's like 267. I think is a previous resistance that became support, and then went under again. So I think that's going to be a real battleground for bulls and bears. For this run, I think that if it's going to turn around anywhere, that may be the place soon. But Christian, I think the people want to know what's your position going into this run.
Oh, thanks, Xander. So, as you know, well, I don't want to get into it. Yes, I had my issues, but I tweeted it out and I have it bookmarked so I could tweet it out again. I rebought my position at 160. So I have that position and I've been holding it. So here we are. So whatever that is, 160, and now we're at 240.
Okay, so the
So
crystal ball works, huh?
no, well, yeah, I look at stuff, but I just felt that 160 was a nice price. Like the market was, I think the market was going up, and Tesla was still kind of dragging. And I said, you know what, this is going to turn around. Like things that were starting to happen. So I just said, you know what, let's go again. And again, I'm not an all-in Tesla investor. Like not, I know like Herbert is, and you are, and kind of Alexander is, Jeff a little bit, but not. I don't think he's all in. So I'm not all in, but I have a significant position again that I bought in around 160, and I'm planning to hold that. And so yeah, it's doing well. I'm very happy, and I hope Elon stays focused like he's doing, and everything looks good right now. Yep, that's where.
So I want to ask the question. I'm very curious what you guys think is driving this kind of rise since January. We'll go with you first, Jeff. But some people were thinking that it's because of pricing, because they cut the prices and then now it's stabilized. Some people are saying, oh, it's because of the IRA or the excitement for AI or the CyberTruck launch. And I sat there thinking about this, and I personally don't think it's any of those. But what do you guys think? What do you think, Jeff?
Yeah, I think there's a number of things happening here. One is, so there was the pricing moves in Q1 and the beginning of Q2. And I believe there's a real, first off, when Tesla, I think there's many misunderstandings. By the way, this is what causes dislocations in stocks and opportunities. One of the misunderstandings, I think, if you're in the Tesla Twitterverse, you think once Tesla updates their website, everybody knows about it. That's just not the case. It's going to take many weeks and months for people to realize, number one, Tesla has made pricing moves. And now, really, number two, Tesla EVs are at price parity, if not lower, than comparable spec ICE cars, if those even exist. And what you can get right now in term with EV, with the IRA credits and with state level credits in an EV, I think very few number of people still understand. But what just naturally happens over time is if Tesla's not advertising, they're not going to let people know that it's going to get out naturally via word of mouth and just increase purchases of the car. So I believe it's kind of like almost like a grenade going off in January 12th, and then the effects of that have just been spreading for the last several months. And there's just greater awareness. Number one, they don't cost as much as they used to, and number two, actually spec for spec, you're actually getting a much better vehicle and with price parity and lower prices now to buy a Tesla EV, a Tesla of all things, than a comparable ICE vehicle. So I think that's one thing. I think Elon recommitting himself at the shareholders meeting of, not only am I not going away, but I have this new Twitter CEO. She's great. She's going to basically plug this hole and drive this leadership for the ad side of the Twitter business. One of the foremost known ad execs on Madison Avenue is now, leading one of my biggest companies. And I think the in the combination of that and he's probably not going to have to inject a bunch more cash anytime soon in the Twitter. I think all of that coming together and him recommitting himself to Tesla to spend more time, that was another big catalyst. Um, and the other thing is getting back to these price changes. A lot of the bears are like, oh my god, they people aren't they're not realizing that they made these pricing moves in the beginning of April. They're going to have lower gross margins. Well, number one, maybe, but we're not sure. But I think what the market has done is the market has priced in Q2 as kind of a trough in terms of gross margins, and
Precisely.
and I don't think a lot of bears have realized that. I think the print could be 17%. It could be 18. I think we need to study that a little bit more to understand what the number may be. By the way, I do think in the second half of this year, Tesla will overachieve in COGS reductions, but I think the market is actually going to look past this. It's not going to be everything's coming down to Q2 gross margins. I don't think that's going to be the case. Um, and I do think units are increasing. The people that count ships, that count cars, are have been slowly ratcheting their numbers up throughout the quarter, and this will be another record quarter out of Tesla. And I'll just go really quickly. The Nasdaq has been elevating. The Nasdaq's way up over 25, 26% on the year. That's helping Tesla. The factory expansion announcements, I think, was talked about as well. That's a vote. That's like, hey, not only is there confidence, but like getting access to one of the biggest markets in the world in India, all you need is access to 10% of that market, and that's a TAM of 150 million people. I don't think people realize that. The China numbers have improved. Remember, China's the number one volume driver. And by the way, they make more Ys get built out of Shanghai than any other region for Tesla. 94, I think it was 94K in Q1. And then finally, I think Xander mentioned this, but Tesla is starting to get more and more credit as an AI company, but I don't think that's even priced in yet.
Yeah, I don't think so
If
too.
if I may, I would like to add two things. I think Elon's China visit was really crucial. It's been the first visit 3 years or 4 years. I don't remember when was the last one. So I think that was really important that it took place and the way it took place and how he had access to certain people and how they did not show the Highland update. I think that really showed us that there's a clear strategy to get the current hardware 3, Model 3s out there, and then pass it to the other thing. The other thing I think we will notice, this is pure speculation of my part, is that institutionals are now entering the market. Remember, Herbert, when I told you we need that double investment grade rating, we got that finally in March. End of March, numbers were still unchanged. We had about 44, 45% institutionals in the stock, which is low for such a mega cap. And I do believe they were all waiting slowly to enter into the market. Could be something that takes 3, 6, 9, 12 months. But we're now 2 months in. And I do believe we're seeing that since the middle of May. And that is going to change the face of the stock. This is going to reduce the beta. This is going to have a much more stable upwards trend. I mean, those of us speculating that Berkshire may already go in, I would like to tell them all this is wrong. This is not going to happen for at least another 2 years. But I do believe that Warren Buffett's team are working with Tesla management as they have been working with Apple in the days from 2013 to 2016 until they entered, preparing the stock to how they would like it for them to enter, meaning, buybacks, maybe even in the long run dividends. And I do believe that's what's going to happen in 2 to 3 years. So I do believe the institutionals now entering in will know that by July, August, when they do their filings with the SEC. But I'm very confident that the number is going to be higher now.
Yeah, and Herbert, I want to pile on too. I want to point out the entire move really started at the Ford announcement, so that was around the 180 mark. So that is just, it's a sentiment shift. I think that's the big deal with what's happening in the stock. We all, that follow the company closely understand that it's undervalued here with its forward, multiples, with the PEs, what's being assigned to Tesla as a company. So short term, it got pushed down a lot, but really it's this like institutional buying. There's a user named RK that sent me an indicator called like an ants indicator a couple of days ago, and it talks about how it's like 15 days of trending upward with volume is apparently indicative of like institutional buying. And I think that that's really what's happening, as Alexandra mentioned so well. It's really money that's on the sideline is now starting to come back in. The bears, I've seen a lot of spaces that are saying that is the bear market over? So like that's new. So you're having a shift where the recession that's coming, and Elon's being so conservative. Um, it, it's it's not panning out, but I'm very hesitant to like say something like that because I think we're all burned, and we feel like, oh, the shoe's gonna drop, and we're gonna have a big correction. But realistically, if money starts flowing back in like that, back to the Nvidia move, that was a $300 billion move. That's not, that wasn't expected, but by anyone. So I think you're going to see a shift. I would love to hear your guys' thoughts on the market overall, because all of this move is happening with just like what the Magical Seven or whatever they're called. They couldn't come up with a good name
No,
for.
it's actually widened. The Russell 2000 has actually outperformed the S&P this week. So that sentiment, that by the way, that's what fintech has been feeding for the last, I don't know, 2 months of like, this is all 7 stocks. And it was for a period of time. But that has recently changed. And by the way, fintech has completely missed the S&P run up, the Nasdaq run up. They were completely offsides coming into the quarter, and now, I mean, there's people are still like, this has got to be it. This has got to be it. Don't know. I mean, if people could,
Yeah.
Accurately predict markets, they would be,
Don't say it.
wherever.
They'd be Christian.
Yeah,
They'd be Christian.
Don't say trillionaire.
yeah, yeah, yeah. It could be trillionaires. So I think people were offside. So now people are trying to get back into the trades. By the way, a lot of institutional money in Q1 when all the 13Fs came out showed them moving into AI names, Nvidia, Google, Amazon, and so forth. So a lot of retail is following that. A lot of smaller institutional and hedge funds are following. So we'll have to see. We're at some key resistance points
Yeah.
now. So um, for the prior peak was August, was a 4,300 S&P, and we're right there. So if it goes past this, I mean, that's starting to become increasingly meaningful, and you're getting further and further away from the 3,600 S&P low. The only thing I would say is that the Fed tightening though is still there, right? That moving up 500 basis points in that short amount of time. We don't know what other breakage could be out there. It could be commercial real estate. It could be a number of other different things where you could have some breakage. The biggest thing the Fed wants to avoid is a credit crunch where there's a lack all of a sudden there's a lack of credit available in the market. They will step in immediately. But until then, they're going to be relatively hawkish until the day, the minute, the hour that they decide to pause and eventually pivot. The one other final thing I'll say, because your question was on macro, this is the first time we've actually seen a visible split in the Fed. The incoming vice chair, um, um, his name is escaping me now, Jefferson, last week before the blackout period was on the record, on the tape saying, I think June is a pause. I think we need to look around and see, are we through these banking issues? Are there any other things we should be looking at? And then we can come revisit it again in July. He didn't say cut. He didn't say we're done. He just said June may be a kind of a wait versus it being a live meeting. So this is the first time I've actually seen visible dissent, and that's usually where it starts. And then from there, then you get to a pause, and then from there you would actually get beyond that. You would get a cut. I think a cut would occur, like something would have to break. Immensely. I think in 2007, 2008, there was some breakage where there was all of a sudden there was 75 basis points of cut. When you see something like that, that's actually not the greatest thing for markets. So anyway, that's where I see macro right now.
A- And then one last thing, with the debt ceiling, can we digest that for the audience on what happened and how that impacts market flows?
Yeah, and I love to get more into discussion with Alexandra, all you guys, Jeff, about the macro and what's coming. So, we can celebrate this, but I still think, and I've been slightly bearish um this year. It doesn't mean I haven't missed a move. I'm actually doing well because I'm doing a lot of trading and I'm doing a lot of positioning. It's been a grind, but um I still am not comfortable totally with the macro situation. This is irrespective of Tesla. But what I think is occurring, and I just want to kind of talk to what Jeff was talking about. The Fed is in no rush to do anything. We had another monster jobs print, and as long as the job market is doing well, then I think the Fed has no reason to do anything. Right? It's higher for longer, and I'm going to go on the record. I'm going to say they're going to move 25 again. So we could have a talk about it. I know the market is pricing in a pause. I don't think they're going to pause. I think that there's enough data to show the economy's still doing well that they're going to try to go another 25 while they have the chance. Now, I may be wrong, and it may have nothing to do with the stock market. The stock market could do fine, but I think the Fed will go another 25, and I think it's just going to tighten conditions a little bit further. And markets have run a lot. I look at stocks all day. I'm trading a lot of different stocks now. I'm in it and out. I enjoy doing it. I look for momentum and I buy it, and I'm not, if it's up 5, 6% in a couple of days, I sell it. I don't have any tax consequences, so it's not a big deal to me. So I take the gain and I go and I look for the next play. So I just want to say though, and I do it all from the long side. I don't do any shorting or anything like that. I do everything from the long side, and you're also able to get 5% in very liquid ETFs. You could sit there at 5, 5.25 in these very liquid T-bills. That's a good return on cash while you're waiting for opportunities. So I just want to say that too. That is there. To the debt ceiling. The debt ceiling did get resolved. I think that was a relief to the markets, even though it didn't really sell off on it like we saw in previous terms. But here's what I'll say. The US government is going to issue a lot of debt. Now, I know on different sites and Twitter they're talking about this and money supply and everything. It is true though, a lot of debt is going to be issued. And we're kind of in unknown waters here. Like this is all going to have to be bought up, right, at these levels. So if the Fed continues to raise rates and they issue all this debt and there's too much debt, this could push rates up further, right? Because is there enough money to meet the demand for all these bills and notes that the Fed is going to do to replenish their coffers? And that's a mechanical issue. So again, I'm not trying to conflate exactly markets with this, but liquidity is a big issue for markets. Markets just don't go up because, oh, everything we feeling good. You need liquidity. You need money coming in, buyers coming in to meet the demand for all these stocks. And if you don't have liquidity because it's being drained because people are buying T-bills or they got to buy notes to fund the government's debt because banks have to do it or people have to do it to keep the country going, that is a drain on liquidity. It might be a short-term drain, but it also could affect markets. So it's just something to think about. And for this show, I like to broaden out a little bit from Tesla to get people thinking about other than just, the stock market's up, hooray. Actually start thinking about some of these things. It doesn't have to change your behavior. You could still be long Tesla. You could still be long stocks, but it's good to just have an understanding of why might the market go down in the next week? Maybe it goes down in the next month because there's a little bit of a liquidity drain and there isn't the money to keep buying these stocks. So just something to think about and something to have a chat about. So, but I love the discussion so far. It's amazing.
So let me just put one example, please. Your main argument for the Fed rising is the job market is still strong, right? Don't you realize that? I mean, I call it always the Biden fluff machine. They are putting constantly relatively solid employment or unemployment numbers out there, and they're constantly revising them to the worst scenario, and nobody takes any notice of the revisions and the next month. And this has been happening now for a multitude of months. I mean, we all know that tech in the Silicon Valley made a lot of people unemployed. We know that there's still a huge gap in lower level work to be found, but nobody wants to take these jobs anymore, right? People want to work from home or want to have certain conditions. So I'm not sure that the jobs market is as strong as you anticipate, and hence allows the Fed to raise rates again. I'm very cautious on that point.
I agree with you, Alexandra. It's not me. I think the Fed is going to look at it and say that the jobs, I think when you look, this is a kind of a discussion that's hard to kind of get our hands around, but I'm not saying that it's a doom for the stock market. All I'm saying is I think the Fed, and they've been telling us, Jeff's kind of pointed out, they're kind of down the middle, but I really do think sentiment, can switch very, on a dime, right? If the Fed comes, we saw the Bank of Canada come out and the market drop on that because they raised 25 after pausing from January, right? It was unexpected. So it affected our markets. If the Fed does raise, again, this is just market psychology. It's not going to affect the long term, but it could hurt in the short term or maybe not hurt in the short term. If the Fed does raise after the market's expecting a pause, that could be a shock to some investors. And then you could get the rethinking. Again, this might not happen. Tesla could still rally amongst this. I'm just saying the overall market might say, wow, the Fed really is serious about this inflation down to 2%. Because I hear people saying they're going to make it 3%, they're going to do this, they're going to do that. They've been telling us all along their number one mission is to get inflation down to 2%. So it would not surprise me to the least if they go 25 basis points. Then we're at 5.25 to 5.5. Now, again, I don't know what they'll signal, but that you see a lot of the retailers selling off. There's a lot of all the retailers have been really getting crushed. The dollar, anything retail has been getting destroyed. Granted, the Russell 2000 has moved up, but there's a lot of stocks that have not participated. It's been basically a big mega cap rally of about 7 stocks until, a few days. But the equal weighted S&P is still only up 1 or 2%, 3% for the year when the overall S&P, because it's so dominated by Apple, Microsoft, Google, Tesla, Nvidia, that's what's carrying the S&P to a 10, 11% gain, while the equal weighted S&P is 1 or 2 or 3% gain. It's like a big divergence. So again, I don't know what it means other than, yes, money is flowing in these big mega cap stocks because they feel it's safety, right? They got a lot of cash on their books. They're not going out of business anytime soon. And it's almost like a safety trade. So we'll see what happens.
And that's the question I wanted to ask you guys: is this Tesla, a sentiment change because of Tesla's fundamentals or the Tesla's story, or is this because of the macro? So Apple is now back up at its all-time high.
Yeah.
What are you guys thinking about the Tesla story? Because I mean, you, Xander, were saying that you think there was a moment of the Ford partnership. Some people think it's because Elon. I think it's personally because Elon stepped up and said, "I'm no longer the CEO of Twitter. I'm going to fully focus on Tesla." Then you see him in all of these, interviews, and he's going out there striking deals with heads of states and corporations now with Ford and GM. It's solidifying now in everybody's mind that Tesla is way ahead, like you guys said earlier. But is that the reason? But if it was the reason, shouldn't this stock even go even further higher than it has now, or is it because the macro?
Well, I mean, in terms of the macro, there's a recent survey. I forgot the name of it. There's basically a bull bear sentiment survey, and it just came out in the last day or two. And for the last year or more, it's been increasingly basically the question they ask people of like, are you bullish or bearish on the market? Are you putting money in? And for the last year, it's been overly bearish. And in the most recent survey, it just switched positive to being bullish. So I think overall, from a market perspective, there is a sentiment change. And from a Tesla perspective, there's also been a sentiment change, right? There was a string of like not great news for Tesla for a long period of time. And you saw the stock technically break down in September below its 200-day and eventually below its 50-day. And not until it reclaimed 178 did it reclaim its 50-day, and it just recently in the last week or 7 or 8 days it reclaimed its 200-day moving average position, which now at the time was roughly $200. So it was technically broken for 8 months. So there has been a sentiment change, and now these moves. So this there was this interim band. There's been a number of interim bands, right? Once you got over the 200-day, there was one at 207 to 209.50, broke through that. There was one up at 218, broke through that. The most recent one was 224 to 230, that there was a lot of resistance at 230. As Xander was saying, 230, 233 is the old, $700 pre-split. There was a lot of resistance there, and it just crashed through there. So and upwards. So these moves, and if you look at some of the other kind of charting out MACD, they're fairly explosive. Again, this isn't trading advice, but there's technicals and there's fundamentals. We went through the whole list of fundamentals of what's happened with Tesla, Tesla leadership and the company over the last month. But these technicals are really coinciding, and they're quite strong.
Yeah, I think Tesla gets dragged into it, but I've heard this type of market called the kangaroo market, right? So it's a trader's market. So the fundamentals of Tesla just get thrown out the window. No one's interested in in long-term investing when everyone's pulling their money out of the markets and going to safety. So, but I had a question for Christian. You didn't answer it, which is, how does the debt ceiling affect uh, the the money supply? If Does that mean that they're going to print more money, and then doesn't isn't that good for stocks? Can you sharpen that for me, please?
Well, no, they're doing quantitative tightening. So
Right.
they're draining money out of the system. Raising
Right.
rates is draining money out of the system because the cost of capital is going higher. So less people are likely to borrow at higher rates, right? They're trying to slow the economy. So what the debt ceiling did, it's actually a drain on liquidity because they have to, when they weren't issuing bills or notes, debt to fund. Again, the government doesn't have any money. The way they get money is income through the country through taxes, and they issue debt. Right? We run a
Mhm.
deficit every year, and we have a huge, what is it now, 30 trillion, $33 trillion debt. So as they issue T bills, people have to buy that. It takes money. The government takes the money, and in return, the investor gets an interest rate on the debt, right? On the note or the bill. So that drains liquidity because it need people, the country, other countries, banks, corporate, they need to buy the debt. So if they're buying the US debt, so I hope this is just a mechanical answer.
No, no, it's
If
good.
they're buying the US debt, they're not buying stocks. If they're buying the US debt, they're not buying another asset. The money has to go to fund the purchase of the bills and the treasury notes, whatever denomination, 10-year, 30-year, 6-month notes, whatever. So as they refill the coffers throughout the rest of the year, money has to be allocated by American banks or whatever to go buy that debt. So that takes the money away from other things to the debt. Does that answer it?
Yeah, yeah, that does.
Yeah.
Thanks.
And that may not do nothing for the stock market. It's just I'm just
Yeah,
telling you what's going to happen. Yeah.
that's my point. I think that there's
But
times
Herbert,
when
I have a big question for you here, and I want to get your answer. Let's bring you in, but this is important. So again, I don't know what's going to happen, but I do look at stocks, and we've had a major run. We got Nvidia again forward, and there's past, but it's trading for perfection, right? I understand bulls come out and say, and I am bullish to an extent, but again, this is where you have to, as an investor, again, this is not financial advice. You have to put your hat on, and you have to keep your emotions in check. Nvidia is $1 trillion company, right? Maybe it's justified, maybe it isn't, right? They have to deliver now, right? They have estimates out there. If there's a macro slowdown, things do get affected. We have companies like AMD trading at 600 times. We have Amazon trading at, I don't know, 200, 300. They don't even make money anymore, and they're back in the $1 trillion zone, right? So what I'm saying is eventually the market is going to have to reckon these valuations with fundamentals. So if Amazon doesn't, I'm just talking about in general, if Amazon doesn't deliver big earnings coming up, the stock's probably going to go down. Apple, you're right, it's back to all-time highs. And guess what? Their earnings are flatlined, right? They just did this new product. There's a little bit of excitement. But again, their business is flatlined and they're at trading at 30 times earnings. That's one of the highest multiples Apple's ever had or probably has ever had. So what I'm saying is fundamentals aren't actually that great. Valuations are high, and we're in a high interest rate environment. So you have to think about that before you just blindly go in and say, I'm going to buy all the Qs up. I'm going to just put everything in there and hope for the best. I'm not saying some people might do that. They might be new to the game. They get excited. So I'm just saying we have to see what happens. So I love to hear what Jeff has to say about valuations going forward and the interest rate environment and what they see for the next 6 to 12 months. Yeah.
Herbert, was Herbert first or?
Yeah, let me
Yeah,
let me
go ahead,
answer that
Herbert.
one
If you
first.
want to comment
So I
about
mean, so
Tesla
first
and
of
the
all,
market.
this is my whole point, right? Basically, that the macro has turned, and even though you don't see the inflation, the inflation numbers have fallen. It's the sentiment has changed ahead of the actual numbers, and you can see that this, like you said, 7 stocks is rising so higher than all of the rest. That's one indicator that people are now putting the money into these tech stocks, and they've over, they're overbidding onto them as well. And so that's why I'm saying that, I'm looking at Tesla and going, okay, it's gone, it's risen, doubled since January 1st. It's not just because of sentiment for Tesla. It is part of the macro change. Some people disagree. They're going, it's not the macro. But if it is certainly the macro that has changed that. But Tesla is the perfect time at this point that's going to now catch up to what the others are. I don't think that Tesla is overvalued based on what you just said in terms of the PE ratios of some of these companies that they're going to get hit once their earnings come into play.
Right. No,
Right
I didn't
now,
throw
people are.
Tesla in there. I threw some of these other companies in
I,
there. Yeah.
right now, I know you didn't throw Tesla in there, but that's my point. My point is that Tesla has room to run. And I
Yeah,
think
I
that
agree.
it's like I'd rather put my money in a company that hasn't, even though it
Yeah,
does, it looks like it
yeah.
jumped from January
I
to where it
understand.
is now. I'm still telling you that I think when you look at Nvidia and you look at the Apple's at an all-time high. And
Yeah.
remember, at a year ago, Apple and Tesla were the last to fall up to September, and then Tesla fell significantly. Apple didn't fall as much. Now Apple's back up at its all-time high. And so there is room for Tesla to catch up, and especially since they are not going to be, as affected in terms of just their fundamentals are incredible. They've been knocking it out of the park, one gigafactory after another. Everything's looking good. So
I agree.
I just think that the story has turned, and it's going to be great for Tesla in the near term.
I agree, Herbert.
Yeah, Tesla, for Tesla, I mean, the all-time high was something like 410, 412. I mean, it,
415.
all these other mega caps have been either making new highs or getting back to their new highs. I think Google's within 20%, but the rest of them are making new highs or are at their all-time high. And here's Tesla's got another basically 200 points to run. Or so I mean, we'll have to see what happens. But if you look at what's driving the rally, it started with AI and the Nasdaq, but it's actually real stuff. Like Nvidia reported a literally a 50% growth intra-quarter. They changed their guidance. They increased their guidance 50% intra-quarter, um, basically shipping more of this data center hardware, these H100s, and all of this. And basically, it's proof that the AI piece of it is not just fluff. It's actually real for many of these companies. Same thing with Microsoft and ChatGPT. There's hundreds of millions of people that have actually signed up for this service that just had a few 100,000 people in November of last year, and I think it got to a million quicker than any other service. So it's actually real. It's not AI hype. Now there are companies that are literally appending .ai to their name, and they're talking about they've added AI to their conference calls. But when you really dig into it, you have to the litmus test is what percent of your revenue is actually coming from your AI efforts, and the answer is different for different companies. But my point here is the Nasdaq was way oversold, and the AI story is just in its beginning, and there's actually real numbers, there's real sales. These Nvidia, these H100s, this hardware that's needed to train these models, like there's so many companies that have to buy this hardware, and they're in short supply still. I don't think they're going to be at supply equilibrium. I think they committed to somewhere in the end of the year is when they actually start getting into supply equilibrium on this. So it's got a lot more room to run in terms of valuations. Um, yes, Apple is stretched to where it's previously been. Um, Google is on the higher end, but not as high as it's ever been. Meta is still pretty low, but what you have to look at these. I agree with you, by the way, from a growth perspective. These mega caps, their market caps are so big that their growth is actually slowed down. It's double digit. No, actually, it's not. It's single digit growth to the flat. And this is where Tesla comes in. If you look at Tesla and you look at their that's where you have to look at peg ratios. If you look at their long term growth and peg it at 35 to 40% growth, once we get past this trough in 23, and if you look at this is what I think the market is doing with Tesla now. They're looking ahead to 24, looking ahead to 25, not much longer than that for sure. And they're seeing like, okay, this company's going to grow 35 to 40%, and their forward multiple is pretty low. I mean, it's probably a peg of like what 1.2, 1. It's probably has the best peg ratio in the business, better than Facebook. So from a valuation perspective, I think Tesla is actually starting to look very good. Let's
Okay.
see what they print now in Q2, but I think they're starting to look really good.
I completely agree with you, and I even think that the Q2 delivery numbers are not as important anymore as they were a couple of weeks ago. Let me lay that out. There are currently estimations of $5.8 trillion in cash on the sidelines waiting to be reinvested. So this is money that people took out of the market, put in short T-bills. And I just want to get back to Christian on the debt ceiling. The consequence of finding the compromise on debt ceiling also was that they had to replenish, what's the word in English, whether they had to fill up the short-term cash requirements of the US Treasury. And so they're issuing like crazy short-term T-bills, which are bought up by these money market funds that people put into these money market funds or into deposits with the larger banks running away from the regional banks. So, right, we had a couple of things happening at the same time. And so there is this huge amount of $6 trillion cash sitting in these money market funds on the sidelines or in T-bills of people that actually were 2 years ago in stock and want to come back into stock. I mean, do remember what happened 2 years ago where the 0% interest rate environment and people had not much other alternative, but they also were really spoiled in seeing extremely good stock performance. So it's all fine to have 5%, and I'm very happy that Christian is happy with his 5% money market funds. But in the long run, you're not going to live on those 5%, right? I mean, you're a risk taker and you want to take risks again. And lots of people are like you. So the question really is, when will this money pour into the market again? Beginning of June, it was 5.8 trillion. If I remember right, in April, it was 5.2. So it has been growing. And so that, and I hear you all on all the other stocks and the Qs and whatever. But when you have to make the decision in which stock you go, you currently have the choice among the big ones of Apple, which I found was a rather disappointing presentation. And I know they're at their all-time high. So what else do you expect, right? Do you really want to purchase the Apple stock at the all-time high? Or if you start or are a moderate believer in Tesla, and I'm not following the stock like we are, not following the company like we are, but you're seeing all these good headlines, right? You're seeing everything that's building up. And people, I do believe, will understand that GM and Ford joining the supercharger network is a concession by them, right? This is Tesla winning. They don't see any other aspect to it. So I completely agree with Herbert and actually with Jazz. Now, if you have cash and want to get back into the stock market, the only one of the big techs that are really attractive is Tesla.
I want to talk about Tesla as an AI company because obviously that's the big jump right now. Everybody's talking about that. Did you guys see this with Elon talking about neural networks? Let me show you this. This is a total speculation on my side, okay? But look at his reply just on June 7th, which is yesterday. He's replying saying, talking about NVIDIA. Also, many other neural network accelerator chips are also under development. NVIDIA will not have a monopoly on large-scale training and inference forever. Is that a hint Am I reading too much in it? Is it possible that Tesla might actually get into this? I think that Tesla's AI story, he's working on it. And at some point, it may be a long time from now, but I really hope it's soon. He's going to talk a lot more about what Tesla's already have with real world AI, with their work to try to get some sort of large language model AI, how they're going to combine XAI, Truth GPT, Twitter, and Tesla, and then even their chips and their dojo. I mean, he's gonna wrap this up as a story, and he's gonna come out
You-
with.
You're right, Herbert. Can I be the little spoil in the party for just 1 second, just to make it interesting? So I agree with you. Long term, Tesla will do all that. But I heard someone, I don't know if they were on Twitter or some interview, and they're a Tesla believer now. But the one thing they said that for them that could be improved was expectations. So we've talked about this, and we know Elon is a visionary, and I get it. But I think sometimes why maybe Tesla doesn't get what their due is a little bit of credibility. And just kind of hang with me here. Elon, again, he's been promising a lot of things. I remember in the 2020, he was talking about Dojo, and now we're 3 years later, and maybe that happened, but we're still waiting on that. He was talking about robo taxis, 2019. It'll be done in end of 2020, 21. I don't want to like rehearse the whole thing, but we're still waiting on it. So when you promise a lot of things and we're still waiting on a lot of things, people become numb to when you speak. So when you say something and it doesn't happen on multiple things, even though it may happen, you're going to actually have to wait for it to happen to get the credit. Once you use that up too many times. So Tesla's a fantastic business on what they're already doing with the energy business and the car business. And I'm super excited about bot. I think that's the ultimate game changer. And maybe people come into the stock on the expectation that's coming because Elon does deliver. When he says you got to take it seriously. But the only thing I would say, as a slight criticism, is when Elon talks about these things, and he's still on conference calls talking about them, and hopefully FSD will be done by the end of the year. I know we can differ a little bit. I think though that clouds people's judgment of Tesla, and can he really do it when you keep putting a deadline on it? It's better just to say, we're working on it. This is a tough problem. This is almost an impossible problem we're trying to solve. We'll get it done. We don't know exactly when we'll get it done, but we will. I think the market would look at that as more of Tesla's the only one working on this. Tesla's the only one that can do this. And we don't know if it's going to be 23, 24, or even 26, but Tesla's the only one that can do it. If they did it from that angle, people would say, wow, there is no one even close to doing this but Tesla, rather than, oh, Tesla promised it, but it's still not here. I'm disappointed. So that's the only thing I would say. If Elon, he's doing a great job lately. On the Twitter call with Mary, he was so magnanimous. He was very cordial, very nice. He was super nice to Mary Barra. And Mary, to me, didn't want to be there. She sounded almost upset that she had to do this announcement with him. And Elon was magnanimous. I love this Elon. I'll
Wait,
tell you. Yeah,
did he
business
oblige
Elon
her?
is my guy. Business Elon is my guy. That Elon, I'll back every day and 7 times on Sunday. I want that guy. I
I
love
want
that
to
guy.
ask you guys: did you guys think when I heard the conference call, the space, Twitter space? Do you think that GM was a shotgun wedding? Did they go, okay, crap, Ford partnered, we got to get together? 2 weeks later, let's make
Yeah,
the
of
announcement. Or
course.
is this something that they needed to have planned months ago and Ford announced earlier than they did? But can they just make this announcement a week, 2 weeks afterwards?
Well, I think that Tesla and Ford were in negotiations for months. I think we actually heard Farley say that. GM, in my view, was completely surprised and then had to jump on the train. But obviously, the deal with Ford was the blueprint to what now GM had to accept. I mean,
Gotcha.
Ford,
Yeah.
Tesla was not going to do whatever again. I still maintain they're getting licensing fees and they're even getting probably a cut. I hope so. It's a shareholder. Getting back to my friend Mary Barra, do you think, and I do believe obviously that that's the case, that Elon and Tesla obliged her in that contract to do a Twitter space? Because do remember, the first thing when Elon came to Twitter in October was that she pulled all her ads because it wasn't, sanctimonious enough for her anymore. So do you think that that was a sidekick of the whole negotiation?
I do.
I,
I don't think it would
yeah.
be announced, but I mean, it'd be crazy to say like, here, come on to Twitter and announce this. And oh, by the way, I pulled all my ads, and I don't think this platform is good enough for me to run my ads, but I'll speak and do announcements for my company. So I hope that that was part of it. I don't think it would be announced as part of this call. And I do believe that
I
there's
think
some
it's
sort of
fine.
revenue sharing for the charge. I mean, these chargers aren't free, so there has to be some sort of revenue sharing because they're gonna have to build out more. B, they're gonna have to service the existing charger fleet, these connectors, and so forth. So I would assume that there's some revenue sharing agreement. That would be crazy if there wasn't.
They,
No,
they
I
they
mean,
put into the agreement that Elon had to follow Mary Barra, which happened an hour ago.
No,
no,
the
no. So,
question
no,
is,
no.
hold
First,
on, I don't understand. The question is, did Elon make Mary Barra do that? To me, it had
No,
to be. Mary Barra in no lifetime would want to be on a Twitter space talking to Elon Musk saying, I'm going to use a supercharger. I think that's Elon using Twitter to say, "Oh, Mary, well, you got to come out on Twitter and announce it." I don't see any other, right? Am I thinking
yeah,
of
the
something
yeah,
press,
else?
no, no.
yeah,
Fabulous.
He, he, he
Fabulous.
he did not force GM to go back to
I don't
advertising in Twitter.
force it,
That's
but
just not
she
that,
did
not
not want to be
advertising on
there,
Twitter,
Herbert.
but
Yeah,
not,
she
but
did not
she,
want to be there.
he told her that we're going to make the announcement. It's going to be on Twitter Space. She did not want to be there. It
Right.
was so
Yeah.
robotic. It was
or
so
take
scripted.
questions.
Didn't want to take questions. It was just terribly, like, you can see that they didn't like each other. She was back against the wall. But the part about the question was, did GM now going to start advertising on Twitter? I think they're very separate businesses. That probably didn't happen. But the announcement of the agreement, it's got to be on Space, and she didn't want to be there.
Right. Remember, Elon said that Twitter would help. This is a way. Who's on Twitter? Most Americans are not on Twitter. You know who's on Twitter? Investors, people that it's different kind of people. And when they hear that, maybe they're not a Tesla fan, they're just on Twitter, and they see a space with Elon. And they hear Mary Barra bending the knee to Tesla after Farley just did it. More people are like, whoa, okay, because they may have not got this
And
news, right?
journalists.
Right. Everybody. Yeah.
And
This
journalists.
gets all written up. Mary
Re-
Barr went on the Twitter space. Right. This is
Ready
this
for
is
this
how it
stat?
happened.
Re-
Yeah.
Ready for this stat? Her last tweet was, guess when?
Before
Months
Elon
ago.
took over, right?
October 27th, 2022, the day before Elon took over Twitter,
There you
was her
go.
last
There you go.
tweet.
Right.
And it wasn't even a tweet, it was a retweet of something.
Yeah. And now you'll see. Now she's back.
Yeah, but that's
Okay.
good for GM, right? Like ultimately, it's advertising, that Mary led, and in this case, she followed forward.
There is no
Well,
way.
for Tesla,
In,
for
go
Tesla,
ahead.
I hope there's a stipulation that if a Bolt plugs in to a supercharger, that it's not allowed to charge.
Does it catch on fire?
Let me say that there is no way on earth that Ford and GM using Tesla superchargers is good for Ford or GM. I'm telling you right now, there's no way you want your customer in the Mach-E going to a Tesla supercharger and being reminded every second of the day he's in front of a Tesla supercharger. Do you know how many
No, I
people that
disagree.
work?
I
I don't.
disagree.
I think this is good for
So,
Tesla. I
no,
think it's
it
good
is
for
good
Tesla
for.
because it's going to convert people to Tesla. They're like, why do I have a GM, whatever? I don't do they even make EVs, a Lyric, a Cadillac, when I could just buy a Tesla for 30,000. I get the supercharger network. It's like a no. I think it's a no brainer. I think
This
it's
is a big
stupid.
point of friction. This is a big point of friction for people to buy a Ford or GM. It's like, where am I going to charge it? These are people that aren't um, astute. They're probably new to EVs, and the last thing you would want if you're buying a Tesla, you've got this supercharger network. You can just go on the computer, you can see where all the chargers are. If you're a GM or Ford, you have no idea where you're going to be able to charge your car, and if the stations are going to be kept up. And Electrify America has got an uptime issue, so I think this removes a lot of friction for Ford and GM EV purchasers in the near term until they ramp their own solutions further, I think.
Well,
Yeah, I mean,
so
ultimately,
GM, Ford, many companies, their back is against the wall. They don't want to do this, Christian, but they have to at this point. There's no ifs, ands, or buts
You have
about that at
to,
this
yeah.
point. And this is not going to be the last. They're going to see a lot of other companies basically come and partner with Tesla, and you're not going to just do superchargers. They're not going to have to. There's going to be a new rule, right? About the automatic braking system is going to become a rule, and so where are they going to get that? Many companies don't have that software. They're going to have to come to Tesla. Some
Yeah.
of them.
100%. I have a question either for Jeff, Alexander, or you, because I don't know the answer. So to me, I didn't think Ford and GM would do this step for two reasons. There are other charging networks. I talked about in my opening thing. Now they break all the time, but there's like 4 or 5 like things around the country. And also, and Jeff, you could speak to this, the Inflation Reduction Act. Isn't there a lot of money dedicated to build new infrastructure that wasn't going to be Tesla superchargers? So why, because the ramp is going to be so slow for Ford and GM, why wouldn't they just say, hey, we're not really scaling till 24, 25, 26. By then, the Inflation Reduction Act money will have more superchargers. We already have some superchargers, and we could maybe build I think Rivian's building some of their own. They're building some out. Why wouldn't they just wait and say, hey, instead of like bending the knee to Tesla, we're going to get some money from the Inflation Reduction Act, and we have some time before we're going to scale. Like, isn't that maybe a plan? They didn't actually have to go to Tesla yet. No, because they're not
Well,
really making that
they,
many EVs.
well, again, it's a point of friction. If you buy a GM or Ford, where are you going to charge it today? The other thing is Tesla has a 10-year plus lead on building. So it's 10 years. So you can't avoid that. And you're not going to make all that up in 1 or 2 years. So if you want kind of the most frictionless, op, you know, environment for people buying your cars, you'd want them to have a place to charge it. And right now, you know, Tesla is the gas
That's what we want.
station, the universal gas station for EVs. Until
That's
that
exactly it.
changes, and by the way,
In
the
America.
cost per charger, the cost per slot, and the cost to build, they have the most efficient solution by teardown. By people have actually torn these chargers down and looked at them. They have the most efficient solution. So for every dollar of capital that either the federal government or private invest in charger assembly and distribution and installation, every dollar of capital, more kilowatt hours will flow if you invest in a Tesla supercharger than any other one.
Great point.
Completely
Fair
agree.
enough. So,
I came from a Bolt, right? I had a Bolt from 2017 to 2020 just because we couldn't get a hands on a Model 3 in 2017. So for 3 years, we were charging at the Electrify America chargers and whatever what they were called, 5 different cards, 5 different apps on the phone, a complete catastrophe. 2 chargers out of 4 usually broken, very low kilowatt hour debit. Obviously, the Bolt, the old Bolts, you can't just go to a Tesla 250 kilowatt hour charger. It's too strong, right? So you also have to understand that most of their cars are actually not even capable of just plugging into the new Tesla superchargers. But apart from all that, America is huge. That's one thing I've learned since I lived here. Building the same infrastructure now with 5 different operators, and I think there are actually 10, but 5 that are probably currently surviving, probably dead as of today, but were surviving until yesterday. There's just not enough infrastructure out there. There's just not enough, and building it costs. Yes, you may get subsidies from the state, but it's not just about subsidies. You have to do it. You have to get it done. You have to have to. And then would Ford have its own? Would GM have its own? Would they all regroup? Would they suddenly regroup these 5 competitors? It's a headache, and they finally understood it, and they rolled out the red carpet and said, please, Elon, may we please come on your Twitter space to announce it. And that's what happened.
So the car is actually what pulls the power. So it's all backwards compatible. So any of the vehicles can pull from the supercharger network, but it's just, the car is determining how much amps it's going to draw. So
is it? Because I heard you can't go into 250 if your battery is too low to pull it in.
Well, it won't go up to the 250 kilowatts. Like the car will just pull as much as it can.
So they would just stand there for double the time, just because
exactly.
they can't have.
Exactly.
Okay, well, wonderful! Isn't that great? We'll have all these bolts hitting their powers.
and I guess we're to assume the Mach E and the Lightning F-150 sales should go up, knowing that their customers can use the Tesla supercharger network. Is that Can we
and
say that? Probably.
and sit for hours there without film, no YouTube, no nothing.
I don't
There
know
was
if
an
it's gonna do
interesting
anything for
stat on
yourself.
the Mach-E. I mean, there's only like a couple thousand sold, I think, in May, and they have like 9,000 in dealer inventory. So they have hundreds of days of supply.
That's what I'm saying.
So I think part of that, I mean, they did do a recent pricing move, a big one, like $5,000 or $6,000. But I think spec for spec, it's still highly disadvantaged, to a $48,000 all-wheel drive Model Y.
Yeah, and couple of months ago, it was the car that came back as a used car sale, the quickest of all cars, ICE and EVs compared, meaning a Ford Mach-E owner, after only a couple of months, put it back on the market because they didn't want it anymore. And that's
Right.
not
So
easy.
yeah. So just let me circle my point, and maybe I'm wrong, but so with the announcement, so if you're a purchaser of a car, you don't have the car yet, and you hear Farley at Ford talk about, I'm going to partner with Tesla with the supercharger network. I want to buy an EV. Mary Barr, I'm going to partner. Don't you think as a consumer knowing, okay, I was going to buy a GM or I was going to buy a Ford EV, but why don't I just skip that? And since now I heard the word Tesla supercharger, maybe I'll go check out the Tesla and maybe I'll go get a Model 3. So that's what I'm saying. Don't you think that the knowing that these car companies are partnering and need the Tesla supercharger network will make some people not buy Ford and rather buy the Tesla EV, not buy the GM EV, buy the Tesla EV, and just stay consistent. Tesla supercharger network, Tesla car. Or do you think the loyalty goes so great that they're just going to stick with Ford and be happy to use a Tesla supercharger? Don't you think
No,
there's
I
some
actually
conversion
think
rate to Tesla?
now I think
No.
there's actually EV adoption rate who will increase. Let's say currently don't have an electric Bronco, right? But there are people that are just Bronco, nothing else but Bronco, right? If now suddenly an electric Bronco comes and they know that the Tesla supercharger network is at their disposal, they will now order an electric Bronco rather than the ICE. I think that's where the and I think actually Elon said
Completely
that
agree.
in that passionate call with Mary Barra. Remember that passionate interaction? I think what he said at the end is it's all good for EV adoption. It's all we really have to see the greater goal here, and I think this will allow the car makers to concentrate on making cars because the EV was really an issue for them, right? The EV charging was an issue for them. So now at least they can say, okay, this subject has been taken care of, probably at a high price for them. We may never know, but at least they can now concentrate on getting the cars out and putting this charger out. And again, I tell you, Volkswagen, Rivian, Hyundai, Kia, all the others, Polestar, they're all gonna follow. All.
Are they doing a charger? It doesn't sound like they're doing the port. They're just sending the adapter with the cars and I guess integrating it into the software perhaps, but
Next
Yeah,
year.
they're not
there are two
but
things.
not but not the
There's,
port like Ford is, right?
No, they will.
I'm sure it's a thing.
It will.
2025 GM.
2025.
Yeah.
Okay.
2025. But there is no option for these guys at this point, right? So even if they build their own charging network, Tesla's charging network is so far ahead, they're going to keep growing it at exponential rate. They'll never catch up. So it doesn't matter if they do it their own; they'll never have the size and breadth. And so there's no choice. And it's a terrible charger. Their CCS charger was just terrible, and they needed to really you have to pay and all that. It's just a terrible experience. So
Yeah, I was gonna say Herbert joined the dark side. He lost a light or something.
Darker with
I lost the light. Oh, I get you. I lost the light. Hold on. Keep going.
So while he's getting set up, I got a question that Herbert will absolutely love talking about. Hey, we can see you again. So uh, and before we lose Jeff, so this Vision Pro thing, let's talk about it. And do we see any integration into Optimus? Do we see sitting in a robo taxi using our Apple Vision Pros? What were your guys' feelings when you saw the product?
Yeah.
Go
So a lot of people do not like it when I say things like this, by the way. So I'm going to get a lot of hate. But what it is that, okay, I look at the Tesla bot. Tesla bot can be taught by humans using VR glasses and things that they're holding in their hands, right? They do the action, then the bots learn. The robotaxi, right? The cars are FSDs taught by all the cameras that all the cars have. How do you get all that video into teaching the bots all the activities that they need to have, right? Can you just use YouTube videos and then use that to teach the bot, right? These simulated scenarios. So I've been saying for a year now, you guys have been hearing this. I've been saying this a lot of times. I think that Tesla will need to have its own virtual reality glasses. Now, I don't know if that means they're going to have to partner with Apple because they just need simple cameras. That's all it needs, just cameras. And if you see the setup that the person had in Tesla to teach the Tesla bot, it was a very simple device. So I just think that they will get into VR. They will need to have consumers do this. But then, I just threw out the idea that Apple needs to create an Apple car. Tesla needs to have thousands of these VR glasses, but I don't see it
No,
happening. I don't think that they
Apple's not
need
making a
Apple
car.
to create them.
Apple's not making a
No,
car.
they're not. But Apple can make a car and then partner with Tesla to make it. And with the unboxed model, they can now partner with other brands and put the brand's label and insignia on it, and the look and feel of how they want to do it. But everything else is licensed out to Tesla. And in
Okay,
exchange,
take it from me. I take the other side on that one. Easy.
yeah,
Never.
yes, not gonna
Never
happen.
going to happen.
No, I already
Me
said
too.
it's
Not going to happen.
agreed. Not gonna,
So
no,
yeah,
I know.
yeah. All these partnerships, these are big boy companies. They have hundreds of billions of dollars. Why does Apple they should just do it? You don't need to partner. Tesla should not be partnering with Apple. Google shouldn't be part of it.
Yeah.
These are behemoths. They need to do it on their own. There's no you partner with little companies and big companies. Giants don't partner with each other. That's not that's silly. It's
Yeah,
silly.
I mean, if you've studied how Apple does product, um, they they don't own their own factories. There's a factory, I guess, in Ireland that they own, but in general, they don't own their own factories for 99.9% of what they build. And they go to something called a contract manufacturer. But what they do is they don't just say, "Hey, contract manufacturer, build me an iPhone." They go in and they spec out every single detail of how it's assembled, how it's attested, what equipment is used, and so forth. So yeah, I don't see. I mean, the kind of partnership that could occur could be on Tesla. We want to use your FSD. Tesla, we would want to use your motor or inverters. That's the kind of partnership. But to say an Apple car would go into a Tesla factory, I don't see that today, and I don't see the value to Tesla today. But yeah, I could see partnerships on hardware and software potentially, but not Tesla acting as a contract manufacturer to Apple. Contract manufacturing is a very low margin business. It can be made to be higher margin. In this really you could, but in general, it's a very low margin business.
All right. Do you guys want to do a segment on ESG? Is this a good time to do that, or do you want to continue the conversation on Tesla?
No, we can do that. No problem at
Okay,
all.
let's do
There's not a lot to be said today. Yes. So why did I tweet this? So you remember last year in May, S&P was making all this big yupla about ejecting Tesla out of their ESG S&P 500 ESG index. They have an S&P 500. We all know that, but they also have an S&P 500 ESG index, which is not followed anymore by a lot of funds because it was so ridiculous. So the question was, what would they do this year once the rating came back up? That was supposed to be happening in May. Well, all quietly on April 21st, they re-included Tesla back into that index. There was no press release. There was just
Really?
one document. Oh, yeah. Isn't that cute, right? And so they re-included Tesla in there with, I don't know how much it was, probably 25, 30 other companies that they had thrown out and now we're back in, but nothing happened on it. I did work with a journalist after, and he made an article about it, how ridiculous it was. But so now that it's in there again, we could access the Tesla ESG score again. There is a tweet on my timeline where you can get to a page of S&P where you just put in any corporate name and see what ESG score yet. Exactly, that's the one before that. What any company's ESG score is. And if you want to go back one, Herbert, so Tesla's ESG score is 37, which is of course ridiculous. But it's even more ridiculous if you compare it to some companies. So especially Philip Morris. I mean, it was a coincidence that I was looking up Philip Morris because there was an article in the Financial Times that they wanted to really now go big scale on ESG. And so that means also spending a lot of money, paying all these consultants and rating agencies, getting to where they wanted to be. So surprise, surprise, Philip Morris is at 84. So this company producing cigarettes is just at 84 out of 100 points for ESG, while Tesla, trying its very best for a sustainable future for us all, is at 37 for the same reasons, obviously, than last year. So, which also showed what a shenanigan it was last year, because the score has hardly improved. And their reasoning last year was that Tesla's public stance was so bad that they had to eject them because they were in the lower 25% of its industry. It's not really better now, but anyway, the whole thing just shows what a racketeering system it is. It's the mob. It's really, this is for me the financial mob. I'm actually doing some research and we'll talk about it in 2-3 weeks. But it's disgusting. And anybody who still believes in ESG, please reach out so I can tell you how bad it is.
And you know who leads that movement, don't you?
Go ahead, Christian. Tell us.
Fink.
Oil. Who?
Larry Fink. Doesn't he?
Oh, yes.
Yeah,
Larry Fink.
Isn't he the architect with making companies do certain things, and he's kind of the? Yeah. Am I wrong on that?
He is.
Yeah.
He's very much so, and he has a lot of support from the Democratic Party, of which he is a fervent supporter, and actually even dealt as a potential presidential candidate for 2028. And he's obviously trying to pull a lot of strings. This is really a small group of elites trying to micromanage corporations for them to adhere to their political programs. Meaning, you get goodie points because you comply to this, and this, and that list is made up by people who want to have an influence, right? And it's politically driven. It's shenanigans. And it comes together with a lot of things. We see all these companies currently taking heed, Bud Light, Disney, and all that. It's the same sort of movement. It's the same sort of structures that are trying to have this corporate index on all this Human Rights Council index, the same way than the ESG. This all comes together currently, like the last 2 years, and has the same aim. And it's horrible because I so wish it wouldn't be political. I really wish I could tackle this whole subject without getting political. But unfortunately, it is not. It's not possible. There is a real huge political force behind it. And they're just, trying. And I'm not even thinking that all of them are having bad intentions. But when it comes together at the top, the intention is really, really bad and black.
Yep.
That's it for today on ESG. Yeah.
We saw it with Target, just, and we can move from this, but sometimes it's bad for business, right? Like Bud Light, 20%, 26% sales. Like it can affect your bottom line when you try to do things that maybe your customers aren't, totally in favor. That's why you always have to put the customer first. And when you push these agendas, it could backfire and shareholders get caught up in the middle. Go ahead, Herbert.
Exactly.
Yeah, I mean, it's a good thing that we're seeing Elon do everything he can to damage the brand. I mean, let's not put it
desensitized. We don't care anymore.
But actually, it's worked out because he's basically shown that CEOs should be able to say what they need to say, and it shouldn't necessarily affect the product and the company. And that's what we're showing with Tesla. So he's
not as the CEO though, right? He's saying that you should be able to say anything as a person, as an individual, and there should be a separation between the company and.
Good luck with that, though. Good luck with that.
No, but what I'm saying is that he has been doing things that he wants to do, and it's ruffled feathers, but it hasn't affected the brand or the company, and it's actually desensitized folks, and I think that that's a good thing.
Yeah,
that's it's fine.
Funny enough, though, but I agree with you. Like, put Elon aside, these other companies, though, it's not the CEO the CEO might not even know what was going
Right.
on, even though they're going to take the blame. It's maybe a marketer in the company or some group over here trying to promote some type of divert,
Agreed.
and then they get in there. The CEO might not even know what's going on. They got to clean up the mess. They're going to get the heat, but I don't think Cornell at Target is like, oh, let's put that little thing in the corner. Like, he probably didn't even know what was going on. He's probably dealing with it now. But so
It's
yeah, that's just
it's worse. It's worse than that because there's a score. So this Human Rights Council gives a score. Lots of companies have 100% score, but to maintain it, you have to have certain LGBTQ actions. You have to have this and this and this and that. And then if there's no action, whatever. And then all these companies have now diversity officers. So the diversity officer meets with marketing department, meets with the legal department, and these diversity officers, they are linked. They are in constant contact with the Human Rights Council, telling them, oh, your score is under pressure because you didn't do this yet or you didn't do that yet. And so, yes, the CEO is not the person immediately informed what's going to happen, but now these diversity officers who all been trained at the same good old school are perpetuating this all over the place, and depending on how big their influence is in the company and how many people they can convince that this is the case and how important this 100 score is, because what is this 100 score? Well, it filters into ESG, and ESG determines what you get as an ESG rating and how much you pay when you refinance your company. So this is dirty to the point. I mean, it's crazy because you have something so sacrimonious, and on the other side, it is blatantly corrupt. It's the first time in my life. I've always been very careful with governance, but it's the first time where you have this combination that is sick. I don't find another word for it. This is crazy what's happening.
So this is really good for Tesla because they're self-funded and they're not looking to refinance their own company.
There are a couple of things, and I actually want to pick this up from Herbert. Elon has never played this game. Elon is very, very clever, and I think very anti-playing these games. So he never paid for ratings. He was always very, very worried not to be classified as one or the other. There wasn't much LGBTQ around Tesla. There were a couple of initiatives, and then it quickly died. So he always stayed out of that mess, but he financed and took on the board Hero to do the impact reports and to do their own reporting the way it should be done. And so what Tesla did, and I think the other companies from Elon as well, but we have less view on that, is trying to stay out of that mess. So what do? Well, they get attacked by journalists and by anything else of this establishment, including S&P ratings for the ESG, because they're not playing the game. They're not playing ball with them. They're staying out of it. And that is actually, in the short term, hurting them, but in the long term, a very, very good thing, right? We're not getting into a Target situation. We're not getting into a Bud Light situation because we're not playing this game.
Yeah, except we got to set up some cameras in a mine, though.
Yeah. But you do understand at the shareholder meeting center, as you were there, you have 2 or 3 of these activists. They're all with the same motivation. This is all the same type of people. It's a complete organization of people sending them into these board meetings and whatever.
Yep. Good stuff, Alexander. Thanks.
5 minutes left here. Let's talk positive stuff about Q2. What are we expecting? Let's just go quick roundtable. What are you expecting for Q2?
Christian, because he will be right again. He's just going to put this number
442,000 deliveries. Book it.
442? Yeah, you're way too low. Keep going.
You're too low. We too low.
So what I think, I'll just be real quick. So I think it's going to be in that 440 to 445. I hope I'm low, but that's where I think it's going to be. And
what do the prophets say?
What's that?
What do the prophets say that track this stuff, that keep upgrading?
Yeah, I think margins are still going to be under pressure because they cut into this quarter. So, and we've had a little bit more cuts. So I don't think it matters. I'm just saying the financials. I don't think the financials are going to be great. I mean, if the energy business shows a little bit more improvement, that'll be good. But I don't think autos are going to look great. I mean, I think they're going to grow about 5%.
You can get a car for under 30,000 if you
qualify.
What's that going to do?
I agree. So I'm not talking about the stock. I'm talking about the actual numbers. I don't think we're going to get.
That's what I'm talking about.
Yeah. Oh, you're talking about the stock. Yeah, I think we're going to go higher. I mean, in after hours,
No,
we're
no,
going
no. I'm
higher.
saying that if you can get a car for under 30,000, which is way below the average selling price,
They need to
and you can,
advertise it though. They need to advertise it. Nobody still know. You're answering your own question because why would anyone buy any other car than a $30,000 Model 3 if you're looking for a sedan? There should be no inventory of that car. It's only coming out of Fremont. Every single Model 3 should have someone to buy it right now. If they advertise that price with state discounts, it could be under 30,000. Every single person should be buying, not every person, but there is so many people should be buying that car then. There should be no inventory of that car. There should be none. So until that happens, they need to advertise.
I think we
Why
agree
would
on the
they?
advertising.
Yeah. Why
I
would
think
you
we agree on the
inventory that
advertising.
car for a $30,000 Model 3? Why isn't that sold out?
Yeah. Well, we'll see whether it's going to be sold out. But I mean, the thing is, you were right so often on the numbers that I dare not say anything else anymore. I still hope for more than 450,000, but officially I'm going to say 442 just because it's Christian. Um, the thing is, I don't think it matters anymore. Right? You have these periods where each and every bad news is amplified and is a catastrophe. At the moment, I don't think we're in that anymore. Everybody will look over whatever happened. Everybody knows this year, and for that actually, Elon was more clever than I thought. Because initially I said, why in the world is he putting out there that we're having still 12 catastrophic months ahead of us while everybody was already in an economy? Well, the good side of that is, the silver lining of that is that nobody expects good numbers from Tesla really this year. If they do get to 1.8 million, it is going to be a victory. So he was good on that one. I'm going to give him that. So 442, 450,000 is the number.
Yeah.
In margins, I think you're right, Christian. I expect margins between 15 and 17 for gross auto, just because, like last quarter, it's very difficult to find that average selling price. We're still in adjustment area where it's really very difficult for anybody to model where we get. So I'd rather be a little bit more on the cautious side. But again, I don't think it matters. I think we're currently having so much good news that is actually palpable. You have the feeling that, okay, once we get over July, the CyberTruck is there, right? It just, they have now talked about August being, pre-launch, and then September, October being really the launch of the CyberTruck with deliveries. So if this is all happening, yeah, me too. If this is all happening, what the heck about July numbers? They're backwards looking, and everybody will have forgotten and forgiven.
Yeah, I do have to run in a minute here. I'll just add to that. My number is 457,000 for the quarter.
nice.
And I agree with Alexander. I think the markets are looking ahead. They're looking ahead to Cybertruck. They're looking ahead to expanding EV adoption. They're looking ahead to Tesla having basically the market on supply of EV, which is the truth. And again, in China, it's obviously a lot more competitive, but in the U.S., they certainly have a lock on supply of EV. And just remember, we have all this news on the charging with Ford and GM. Those CEOs are both on the record in the last week coming out stating they're not going to be profitable in EV until 2030, and they're not going to be at price parity with ICE until probably after 2030, where Tesla is at parity and below, as Christian was just bringing up with ICE already. So, I mean, there's some fairly big news, and I believe the markets will look ahead. There was an electric article today on CyberTruck, that they're targeting roughly 375,000 units a year. When OEMs do these supply contracts, remember they also ask these suppliers for upside that's built into these contracts. So I like the fact that they target 375. I believe they're going actually after internally something higher, and I also believe it's going to take them at least 2 years to get to that run rate. So why not put a number out like that when the reservations are well north of 1.5 million right now? So some interesting Cybertruck news. What I expected, which be the alpha units, sorry, not the alpha units, the final PVT production units are available probably the end of August, and that kind of aligns with the announcement timing. So it's going to be an interesting summer for Tesla, and it'll be great to see the market. There's gonna be a lot of anticipation for that product. I do have to run. So
Yep.
thanks everyone. We'll see you soon.
All right, Jeff.
See ya.
Uh,
Thanks, Jeff.
so like Tesla selling Model Ys as the number one vehicle in the world for the first quarter. I think that like this is, we're seeing that statistic come out. Then you're seeing Ford and GM, and the Cybertruck is coming. All of those things add up to Tesla one, right? The thesis of just the car part
Right.
of the business, we're all correct and most importantly, Elon predicted this, right? He stated in 2022, Model Y will be the highest grossing by revenue, and then in 23, it's going to be the highest selling, the most sold vehicle in the world. And so far, as of Q1, it's true. But for me, really, it's this, like Christian was mentioning, FSD. Why does he keep saying it? You don't drive FSD. I do, and I have uh, phantom stop signs because my street where I live turns to the right and then turns to the left. So it would like hesitate and come to a stop there and like look to proceed, even though there weren't any stop signs. I've had this the entire time, and now with this latest build, that's been solved and it's gone. And the roundabout is great. I went and finally played some basketball in I don't know in over a decade, and I left the parking spot and got to the park all on FSD, no interventions, no inputs at all, no speed changes, nothing. And it's incredible. There's one other thing with the FSD that is on the street that I live on. Previously, it would use the offset, so it would like apply 10% to the speed limit sign. Well, now it's capped, and it says that the speed limit is going to stay for this type of street. So, like all of these improvements are things that the market just does not comprehend yet. It's not being marketed right. Like once the mainstream media starts talking about FSD in a positive light and understands just what we're sitting on here, that's when you're gonna, that's when you're gonna see a real jump in the stock price, because that is where the value is, obviously with robots, but that's a little further down. Although, man, that video just I keep watching it like every week or so. I have to like load that thing up and just watch these robots. So that's what I'm excited about with obviously the stock price. I'm very happy that we are seeing a recovery. There's some hope for leaps not expiring. We're talking about stupid decisions that were made, going into a bear market where I think a lot of people were still on the options train. And ultimately, like I just blame myself for not understanding just what it meant when the Fed started increasing interest rates. So great lesson for all of us. But there's hope. So maybe it won't be uh, large losses in the portfolio.
Yeah, let me close with this, which is I think that 2023 is an absolute inflection point for Tesla for two reasons. One is, everything that they've been working on for the last decade, last year, it's coming to fruition. This is where we're seeing gigafactories at full scale. We're actually seeing bots actually, demoed being done. FSD, everybody's using it now. It's now wide release, right? At the same time, you're seeing very clearly now that the competition is not coming. The competition themselves have come out and said that they pushed off their production. People have been saying, you're complaining that Elon says things that doesn't appear. What about the OEMs, the legacy guys who've said that I'm going to have 25 different EV cars by 2025, and they have two, and then they got rid of one, and so now they have one Hummer. That's it. So it's like, I think it's clear now. Everybody's now seeing, and then you see Farley coming out in an interview saying very clearly the challenges that they're facing. It's clear now. The OEMs have no more chance. The separation's happening. The inflection point has happened. Tesla's won the game. Everybody sees this at this point. So 2023 is a big year for us. And many of us investors are been harmed because of last year. So we're a little gun shy to get excited again. That's fine.
Yeah.
You should do that. And we actually, I'm very happy not to state numbers that are overshooting what we think Q2 numbers are, because it is absolutely about expectation. But internally, I think it's going to be higher than your number, but I actually want to tell your number to everybody and lower because I want us to surprise.
Again, I hope I'm wrong. I just
I know.
what
I
I
know.
think. It doesn't matter.
It's an estimate. It's an estimate. Okay. Thank you, everybody.
Let's give him a little bit of glory, right? For a couple of weeks, he's going to be the one directing the number.
We'll see. Well, I'll give him a little bit. Fine. We'll see.
I did get last quarter to the
You did.
to the T.
I know you did. I know, right?
Now, this is a great
guys.
show. Awesome
Thanks,
discussion.
everybody.
And yeah, great job.
Thanks.